Welcome everyone to another edition of Endgame Finance. Today I want to talk to you about one stock I bought. Today I purchased some shares of Rivian. Rivian is an electric manufacturer. They manufacture electric trucks, they manufacture electric vans, and they're getting into battery storage business as well. So I'm really excited to buy the stock. This is going to be a highly speculative investment for me, so I'm not betting the whole farm on this. I'm just speculating these shares will appreciate in the future. And today we're going to go over the reasons why I specifically bought this stock and what it would take for me to sell it and just get out of there. Now, as I mentioned, Rivian is an electric truck maker. They went public sometime about 15-ish months ago. They went public at the peak of the basically tech bubble we experienced during COVID. So these guys went public at a perfect time. They raised $12 billion when they went public in November of 2021. Now imagine that. In today's terms, in today's economy, in today's stock market, it would be basically impossible to raise $12 billion for a startup that is still losing money. And they are still losing heavy money. We can see in this graph, cash positions actually decreasing around $5 billion per year. So Rivian is at a loss of $5 billion, but like I said, they raised $12 billion. Prior to that, they raised about $22 billion total. So these guys still have around $13 billion left, and their burn rate is $5 billion. So if they don't hit production equilibrium where their costs are matching their revenues, these guys will go bankrupt, and that may happen within the next 2 years. So like I said, Rivian is losing $5 billion per year. They have to hit production of around 100,000 units for them to break even and just to become net cash positive. They raised $22 billion totally. However, their market cap today is only $17 billion. So we can see a huge discrepancy there. And the reason for that discrepancy is Rivian just did not deliver the numbers. They guided for 50,000 units produced in 2022. They did not meet that goal. They met half that, around 25,000 units. And they blamed chip shortages heavily. However, Tesla at the same time produced over 1 million vehicles that basically have the same components. So we can see these guys said some excuses. They probably had some trouble with management. But recently they laid off a large percentage of their upper management. I mean, Rivian, Tesla, I'm assuming, lays off a lot of people as well. But Rivian just laid off about a dozen of just high-end management positions. And we'll see if these guys can improve. If these guys can hit 100,000 units by 2025, they will become cash flow positive. They will stop losing money. But if they are not able to reach this goal, if they're not able to guide for 100,000 units for 2025, I will most likely dump these shares and never look at them again. One thing I really dislike about this company, they had heavily compensated their employees with stocks. We can see in 2022, for the first 3 quarters, they spent almost $1 billion in stock compensation. And we can see also below their appreciation, basically their factories are costing them around $500 million just to run for 9 months. And like I said, these costs will have to be recouped only by higher volume production of vehicles, which has to be around 100,000 units. So far, Rivian has demonstrated they can produce around 25,000 units per year. However, majority of that was produced in the last 2 months of the quarter. So I expect these guys to reach around 60 to 80,000 units in 2023, and just to start hitting 100,000 in 2024 and hopefully more in 2025. I really dislike the heavy compensation expenses. I also really dislike their high operating costs. But if these come down, I can see their management just basically scaling this, because they do have fantastic management. They have RJ Scaringe, who I've been following for a while. He's an MIT graduate. He's a really precautious person. He really took Rivian step by step just to build him out, to make sure there's no quality control issues. But I see this guy at the helm, and a lot of people trust him in the industry. Jeff Bezos has invested a substantial amount of money in the company. Amazon owns, I believe, around 10%. And Amazon has 100,000 units ordered on standby from Rivian. Now, what I really like about the Rivian, I really like their trucks, and I watch Doug DeMuro on YouTube. He's a YouTuber that reviews vehicles. You can see his videos. Just type in Doug DeMuro R1T or R1S, and you can see his reviews of the vehicles. If you want to check out those trucks, check out Doug DeMuro's reviews. And I really enjoyed watching that. I really like the trucks, but what I like even more is their van production. Now vans, this is the meat on the bone. Commercial vans are extremely crazy to maintain, because when you see Amazon or FedEx, their vans are constantly stop and go, and just drop off packages, keep going, stop, go. And that really destroys the truck. It destroys the transmission, destroys the engine, destroys the tires, and puts extreme heavy wear and tear on their delivery vehicles. So their expenses are not just fuel and delivery, but maintenance expenses are tremendous. And Rivian Van eliminates majority of these expenses. I would estimate around 80% less. 80% is spent less on maintenance for these vans, because these vans do not have engines, they do not have transmission, and all the braking is actually putting the energy back into the battery. So their brakes don't wear out as fast, their tires don't wear out as fast. So everybody will want these vans, especially for commercial purposes. Like I said, Amazon has placed 100,000 units order, FedEx and UPS, USPS, and pretty much every foreign mail service provider will want these trucks. They will want these vans just to reduce their operating expenses. And what I additionally like about this van business is Rivian has their own OS fleet, so they have their own software management. So they do charge a subscription fee to these fleets. And just to maintain these fleets of vans, these guys are going to be bringing in constant revenues from subscription for maintenance of the vans, for charging the vans, and for mapping out their software, and etc. Just basically full suite integration of Rivian software into Rivian trucks that will be on the road for Amazon, UPS, FedEx in possibly millions of units. This is what I really like about Rivian. They have a really high order reservation. I believe they have around 250,000 vehicles on reserve. So if they can bump up their production rate, they can actually break even, possibly even in 2024, and just start generating cash in 2025, especially because they're including their own parts into these vehicles. They have their own electric motors that will be going into the vehicle. So electric motors will reduce they will improve their margins significantly. So depending on how fast these guys can get the parts, their own parts into these vehicles, and how fast they can scale, this company will live and die by scale. If these guys cannot reach 100,000 units produced in 2024 and onward, these guys will go bankrupt. So this is a very risky bet. I'm putting only a small amount of money into these shares. I'm not betting the farm. And hopefully in the future, these guys capture some of the market. EVs are currently around 10% of all vehicles sold. They will be around 20 to 30% of all vehicles sold in the next few years. And I just expect Rivian to capture a huge chunk of that market. For those reasons, I bought some Rivian stock today. So that's it, guys. If you have any questions or comments, please leave it below. Hit the like, subscribe, and share. And as always, guys, if you're here, you're in the end game. And have a great day.